Jinesh, welcome to the Formative Economy podcast. Thank you so much for coming on. Would you like to just tell everyone a little bit about Sprive and what you do?
Yeah, so like you mentioned, Emily, thank you for having me on. I'm the CEO of Sprive. We're a free app essentially that helps homeowners pay off their mortgages faster and save interest just by doing their everyday shopping. So if you think about the average homeowner, they typically spend a lot of what they earn. And imagine if you could turn all your shopping effectively into a mortgage overpayment.
And Sprive came out of your own very personal experience with your own mortgage. So, what did that moment, I guess, reveal to you about how people actually experience debt emotionally, not just the finance part of it?
Yeah, so I mean, I took out my mortgage about 14 years ago. My wife and I bought our first home and just vividly remember seeing the mortgage offer document, and it's saying for every £1 we borrow, but we'd pay 50p in interest. So we would usually be paying about £150,000 in interest over the lifetime of the mortgage. And that just didn't sit right with us. So we went through a journey of trying to pay off our mortgage as aggressively as possible. And through that, I think I learned very quickly that lenders don't necessarily build technology to help homeowners pay off their mortgages faster and save interest, and it created a lot of friction. I remember making overpayments, and I had no idea how much interest I was on track to save, how many years I was on track to knock off. And you look at the interest rate environment now, it's massively changed. I think now a lot of our customers, it's more like for every pound they borrow, they're paying £3 in interest. So you can imagine if you're borrowing £300,000, that's £900 in £900,000 in just in interest, and then you still got to pay back the money you've borrowed as well. So it's a really kind of tough. And I think initially when you're looking to buy a house, you're very much focused on affording the monthly payments, and you're affording getting the house that you essentially want. But then obviously there's that cost of debt that you've got to really kind of think about and pay. And it's tough in the UK because we're seeing millions and millions of people that will have a mortgage past the age of retirement, and you never know what could happen late in life. You could lose your job, you could fall sick, and you've got things like the rise of AI. And, can you say confidently in the next 10, 15, 20 years that you will be able to kind of hold down your job? For many, the answer will be yes. But then for some, that might not be the case. And the last thing you want is to be able to not afford your monthly kind of mortgage payments and lose your home. And so trying to empower people to kind of take back control. And that's what Sprive's ultimately trying to do, is whether it's through kind of the shopping. We also have a spare cash feature where you can put spare cash towards your mortgage. It's really just trying to save as much interest as you can, try to knock as many years off your mortgage. Really, our customer base is on track to save over £250 million in interest and knock over 44,000 years off their mortgages. So it's pretty impactful, and it's a free app to use. So, for a lot of homeowners, it's nice to be able to kind of take back control.
And that's amazing, isn't it? Because your growth has predominantly come from word of mouth. So, what is it that compels people to share tools that change how they relate to money?
Yeah, I think obviously if you look at the last kind of 3 years or so, with the mortgage rates increasing, there's been a lot of news in the press around the mortgages and how much of a challenge it's been. And I think everyone is kind of feeling the pinch. And the great thing about generally people don't tend to talk about money, but when it's your mortgage and it's such a pain point, people do vent and talk about how they they're either their have gone up, or the cost of debt is so it's so stressful. People do share because it's not a personal problem, it's a macro problem. Everyone is in the same boat, and so people are aware of that, and so people will talk about their mortgages, and that kind of helps because obviously we're a solution, and so people are using Sprive and they are actually getting the most out of their shopping. They kind of have a good idea that actually the people around me are probably going to have the same challenges, and so they're much more open to kind of share what Sprive is doing for them. And obviously that's good for us as a business, because over 50% of our kind of new customers that we get are from either customer referrals or from just word of mouth. Every day we have 3,000-4,000 people who download the app, which is nice.
And I guess going back to your point there about the word of mouth and the referral piece, what role do you think that's played in, I think, when people allow technology into such a personal part of their financial life? How big is that trust factor been?
Yeah, I mean, when you think about a mortgage, for the average homeowner, it's their largest household commitment, it's their biggest obligation. And so there is an element of trust that's required for a person to effectively choose an app like ours, which they may have never heard of, and say, look, help me manage my a mortgage, and also to power the app, because we have the ability to make one-tap payments to your mortgage lender on the back of like everyday shopping that you might do or spare cash that you might scribble away through Sprive. And that requires trust as well, because you're sharing data to be able to facilitate the payments to your mortgage lender. And so if you don't have trust, then you just don't have people effectively using an app like ours. And so we've grown quite a lot through things like national press. We get a lot of coverage there. We've probably been featured on the national, like, different publications, whether it's the Times, the Guardian, the FT, the Sun, the Mirror, like Daily Mail, like over 200, 300 times. It's kind of like normal for us because we've been in the market for a while. But when people read about Sprive on their newspaper, I think that adds a lot of trust. The high quality brands that we work with, that adds an element of trust. We support 14 lenders in the UK, so the likes of like Barclays and Santander, NatWest, HSBC. Like if you go on the NatWest website and you type in mortgage overpayments, you'll see Sprive mentioned there. And all of these things to add trust. And I think also like friends and family telling, if they're using the app personally and then they're saying this app's great, that helps. Our customer scores are very strong. It's like on Android, I think we're 4.9 App Store rating. On iOS, I think it was 4.6. Trustpilot's very strong. Again, when people come across Sprive, this is the first thing they do. They look at the customer scores, they look at reviews, and our customers have just been very kind enough to kind of say nice things about Sprive, and that really helps. But the Dragon's Den bit was really, how do you get in front of more people? And it's very difficult in the UK because we're constantly see adverts everywhere, whether we're on the tube or whether we're on social media or just on watching television. We're kind of inundated, and sometimes it's very difficult for a brand like ours to cut through. And so there's not many opportunities in the UK where you can be in a show like Dragon's Den, where 3 million people watch that show, and the dragons are very they're trusted by the kind of the UK nation because they are successful entrepreneurs, and they wouldn't invest in a business and put their name behind a business that they didn't feel like had real legs. Being on the show and getting kind of in the backing of 3 dragons was kind of really nice, because to the kind of average homeowner, it kind of gives them even more confidence that the Sprive is an app that is someone that they should trust.
Amazing. And then just looking back at your own beliefs growing up, so what shaped your earliest beliefs about money? And I guess when did you realize that those beliefs might not be entirely rational? Because we all grow up with a narrative of what we're told when we're growing up. What did you hear growing up that kind of has shaped how you've thought about the world as an adult?
Yeah, so my parents, just to give you some context, my great grandfather was kind of grew up in rural kind of Kenya, worked in construction, but then at the age of like 30 started his own construction business. Not transformational wealth, but was able to allow them my dad to go to boarding school and get a good education there. But then he came to the UK with literally £5 in his pocket. And at the time when I was young, he was doing 3 jobs. He was working as a supermarket on checkout. He was cleaning toilets, but he's also then starting his own business, and that did relatively well. And that helped me and my brother to get a solid education. So firsthand, I've seen through like my grandfather and my father that entrepreneurship can really transform the way you kind of live your life. And that's part of the reason why I've probably quit my safe corporate job to kind of start this venture. But at the same time, I think because we didn't have a lot of money, like when I was younger, obviously my dad did, as the business kind of grew, we did better. But we always had this mindset that you only spend what you can afford. And my dad was very big on education. So any money that we did save went on education, educating myself. And there was always this mindset of because you don't spend what you can't afford, and you're always looking for the best deals. And my mum would spend a lot of time like shopping around and just making sure that all our money stretched as far as it could. I think I have that kind of mindset. And so like I'm not very like materialistic. I enjoy experiences, and obviously I enjoy like traveling, and I enjoy like eating out, but I'm not one of those individuals that will spend money on things. I'm very hard to buy for when it comes to Christmas. My wife would be like, "What do you want?" or like family, and I'm like, "Nothing. I have everything. All I need is my mobile phone and my headphones and a book, and I'm happy."
I feel her pain. I find buying for men just like the most challenging thing. But so as a parent then, how consciously do you think then about the money scripts that your kids absorb?
Yeah, it's a good point because I do worry because when you give your children everything they want, they almost become a little bit entitled. Look, my children are quite young, but it's something that's very important to me to kind of make sure they understand the value of money and they have the kind of same principles that I am that I grew up with and work hard. And you need to be able to not expect things to come to you. Like money doesn't grow on trees, and make sure they're not spoiled. And it's hard because, they're not seeing the same struggles that maybe I saw my parents, my parents kind of go through. At the same time, they do see me building Sprive and they see how hard I work and being able to, like, for example, watch Dragon's Den and see their dad on TV and watch that. It was just literally there was four of us and my brother, so it was very intimate in terms of when we were watching it, and they were so proud. But they recognize and they see firsthand the determination to be able to like build something that's meaningful. And so I hope they kind of I think children generally learn by just not you kind of telling them like sermons, but them kind of seeing how you operate and how you behave, and almost kind of by kind of osmosis kind of picking that up. So yeah, hopefully they're picking up on a few good traits.
Amazing. And do you have any experience of the customers that you're speaking to where Sprive is actively changing the way that families are talking about money at home?
Yeah, I definitely do. There are a lot of people that use Sprive that never knew about mortgage overpayments. They didn't even know that was a thing. It's not something the lenders sit you down and say, this is a mortgage overpayment and this is why you should do it. And so people just kind of see, like, whether it's social media or their friends, and they almost like, oh, well, I shop at these brands, I might as well get more money back for shopping that I would do anyway. That's been kind of nice for people to, like, who can never either dream of making overpayments because they can't afford to, or they just don't know what overpayments are, and then they've come across Sprive, and now they found, without them even knowing potentially, that they're effectively making mortgage overpayments, which is quite technical. I think a lot of people are quite scared of making mortgage overpayments historically because they're worried about, like, these fines that you might get if you can overpay too much. But in the UK, you can typically overpay 10% of your outstanding allowance. So if you've got a £200,000 mortgage, that's £20,000. That's a lot of money. Most people can't really afford to make that kind of overpayment. So I think from that perspective, I think we are kind of changing behavior. We're getting more people to kind of be focused around their mortgage. I think many people generally think, oh, mortgage is something that I just gotta have because I want to buy my own home, and the interest I've got to pay. And the fact that we're able to kind of help them take back control, I think is really powerful. And we're also building a community. And so it's nice when you can see other people around you also with the same mindset, trying to all effectively kind of chip away and take back control. And we've had some nice stories as well where, customers have come to us and said, we've been using your platform for 2, 3, 4 years, and they've been able to pay off their mortgage. And that's always nice. And on the back of Dragon's Den, I had so many personal messages on LinkedIn and just people saying, I love your app and what you're doing is great. And that's really nice to kind of, to hear the kind of anecdotal stories around how, people are really kind of changing behavior. And some couples are like, should we Sprive it when they get their cheeky takeaway and things like that. It's nice to hear those stories for sure.
And do you think that there's a belief about money or finances or financial behaviour that's been challenged since you've built Sprive, like your own personal belief about it?
Yeah, so I always got asked the question, like, with your money, should you like invest and should you put it towards your mortgage? And there's all these types of questions that do come up in Sprive or their customers, and they're like, well, why would you put spare cash towards your mortgage? Because ultimately I could, invest it and maybe get a higher return. And, that's why the shopping is like important, because that's just, you're gonna buy your groceries, you're gonna maybe buy a cup of coffee, your takeaways, your holidays, you'll buy your car insurance and home insurance. And so why shouldn't you get more money for, in terms of, because when you start making overpayments on the rewards that you get, it's amplified because you don't pay interest on that effectively capital payment, which you haven't had to fund yourself. So in my head, I see like everyone should kind of shop away their mortgage because it's a financial no-brainer. But the spare cash is the one where you do get challenged. You know, should I put spare cash towards my mortgage or should I not? And I kind of say, well, you can do a bit of both. You can invest. Like, not everyone's comfortable with investing. Investing can be a little bit like gambling if you don't know what you're doing. And it's all nice to say, oh, you can make 7% return over 30 years, but a lot of people don't. They might win some and then lose some. But what you will find out about debt is debt is ruthless. They calculate interest daily, and no matter what, you know, that is something you need to pay back. And if you're unable to pay it back, then it can really kind of have the potential to really damage lives. And so it's about individuals and what they're absolutely comfortable with. But I can say from my own personal experience, paying off my mortgage, and I'm obviously very fortunate, but being able to do that is changed my life. If I still had a mortgage, my wife would have never allowed me to, you know, quit my job at Goldman's. I'd still be kind of doing the corporate job, and Sprive would never have been built. You know, we had, like, in the last 30 days, we've had over 150,000 homeowners use the app, and we're making differences. Even if it's, you know, paying off your mortgage 2 years earlier, 3 years earlier, it's huge. I mean, I saw a social media post a few days ago where a customer of ours is on track to save £84,000 in interest and knock 14 years off their mortgage. I mean, 14 years is huge. That 14 years, their life's going to completely change. They might decide to quit their job. They might decide to go part-time. They might decide to build a business. They might decide to spend more time traveling or doing hobbies or the things they want. And look, everyone has got their own views, but you can have that mentality of you only live once, and you want to kind of get maximum out of, you know, how you spend your time. And the mortgage is ultimately a shackle. And I find, like, look at me as an example. Without the mortgage, I'm now taking bigger risks. You know, some people think I'm crazy to kind of give up that kind of nice employed job. But you start to think differently when you don't have those kind of shackles.
And I guess if I say not if, when, because I think there is a little bit of a snowball effect with everything that you've done at Sprive. And when that becomes widely available, just touching on your point there, that level of financial freedom, what do you think culturally will shift? Do you think we will become more entrepreneurial as a society? We've got that headroom and we haven't got to be burdened by this huge level of long-term debt.
Well, I think it's going to be a real challenge. In the UK, because we've got a structural problem where lenders are now allowing people to borrow up to the age of 80. And we've got, 3 million people that will have a mortgage past the age of retirement, because more and more people now are taking 40-year mortgages. It's the only way they can effectively afford their home. I think Sprive will do its bit and it will help, but I still think, like, if you're shopping, you're going to, you know, shave a few years off your mortgage. If you do shopping and spare cash, you probably save a lot more. But I still think it'll be a challenge for a lot of people. So I think there'll be a select, as with the society, the more affluent you are, the more luxuries you have in terms of being able to spend more time without debt. That'll be interesting. I think everyone's different. I think some people, they value experiences. Some people value like time and less stress. And some people value, other things. So I think it's very difficult for me to say that as a society we will radically change. I think it's going to be a very difficult time. I think when I look at household debt in general, every year that number just goes up and up and up and up. And we're living in a society where people want to keep up with the people around them, and they see on social media and they see the kind of amazing life that some people are living, and they want that. So it's very difficult culturally to you might pay off your mortgage and suddenly, you decide, well, actually we could get a bigger house, and then you take another mortgage, and it's very easy to kind of be in that slippery slope. So I think there'll be some people that obviously, hopefully Sprive can help as well, and that's fantastic. But I think we're going through the next 20, 30 years, I think will be tough, especially with AI. And then robotics combined as well. I have no idea what the labor force is going to look like, and what the government's ability is going to be to as unemployment rises, what the government's ability is going to be to kind of help those people. So it's really hard to say. Like, it's been a positive story. All we can do is we can try to help.
And if we redesign the mortgage system around long-term customer well-being rather than lender risk, what do you think would look fundamentally different?
Ultimately, that's my goal, is to really be the consumer champion for homeowners. And I think obviously the lenders do a great job in terms of supplying mortgages for people so that they can buy their home. But at the same time, I think there's a huge opportunity for innovation. So if any of your listeners have ever got a mortgage. It's pretty painful. They typically ask you for like 100 bits of information, and then the lenders need to verify that information. There's a lot of back and forth. And, you think about like an insurance product. If you book a holiday and you want travel insurance, typically a few clicks and before you know it, you've got your travel insurance and you're ready to go. And there's no reason why, being able to get a mortgage shouldn't be as seamless. If you've got a mortgage with a lender and you're looking to get another mortgage product within that same lender, it's a lot easier than if you're trying to get a mortgage product from one lender to another. But ultimately, you can save thousands of pounds if you really shop around and look for the best deal. So I always and if it was me, I'd always make sure that it might be a bit painful, but I should still get the cheapest deal, because you're borrowing, most people are borrowing hundreds of thousands of pounds. So even a small percent difference might not look like a lot on paper, but over the lifetime, it's serious amounts of money, and so it's definitely worth that extra headache. It shouldn't be like that. It should be a lot more with the capability of technology now. It should be a lot more digitized, and if we can help Sprive, one of my goals is to really digitize the mortgage industry. And if it's digitized, then that means that ultimately there'll be a cost saving. And I love to be able to then pass those costs on to the homeowner itself. And so I dream of a day where, Sprive customers can get exclusive mortgage rates that no one else can get, because we've built amazing technology with lenders, and to be able to then give some of that benefit to, to the customers, as a thank you for using their Sprive. So yeah, I think a lot of innovation that can be done. And, we're building things that maybe lenders necessarily wouldn't build because it wouldn't be their priority one. But, lenders, understand that, they need to be very consumer centric. It's very difficult. There's a lot of lenders in the market. It's difficult to compete on price. And so looking after your customers and showing that you care, is important. And the fact that Sprive is all about the consumer. Ultimately, you speak to a homeowner, there's only two things they really care about when it comes to their mortgage. One is they want to get rid of it, and the second is they want to pay the least amount of interest possible, and that's what Sprive's all about. The fact that we've got 14 lenders that support and effectively we can support through Sprive. It's good, and we're now seeing new lenders. So there's lenders like Skipton and Newcastle and Leeds that we don't work with, but they're starting to get customers going to them saying, well, next time I'm going to remortgage, if you don't work with Sprive, why would I remortgage through you? I'm going to remortgage to a lender that does work with Sprive, because they care more about what's important to me. And so hopefully, we can, as we grow, we have more of a voice, because again, it's like David versus Goliath. We're small, they're big, they have more power, but the power we bring is that if we have more and more homeowners using our app, we have more of a voice, because ultimately, the homeowners are the ones that are effectively paying the mortgage, taking out the mortgage. And so that's what we're trying to do, is just get more of that kind of, community. And the more homeowners we have using our platform, the more voice we have to kind of change the industry for the good of the consumer.
Amazing. And just my last question, because I'm very focused on the next generation coming into adulthood. What's one belief about money that you think children should learn earlier than they currently do?
Yeah, that's a good, I think, at school, there's not really much of a curriculum around money. And I think being able to understand how to manage money, I think is super important. I think being able to like have a strong view on like how to budget, how to like only spend what you can afford, like things like buy now, pay later have the ability to kind of completely ruin lives. I think a lot of people, you're seeing it in the press now, like people taking student loans and not understanding actually what they're actually signing. It's very easy for someone to issue a credit card, and then you see nice things on social media, and then you buy, and before you know it, you're on a real spot of bother. So I think I'd love to, the education system at a very young age to kind of teach people how to budget. If you have two options, if I could give you, this money now, you got a choice of like spending versus saving versus investing. Starting like people understanding how to invest, how to make investment decisions, understanding the difference between like gambling versus investing. I think all of that stuff, if it was taught at school, I think would be, would get a lot more of a positive, situation for a lot of adults growing up, to make sure they make wise decisions. Because if you manage money carefully, ultimately that means that you can make good decisions later in life that ultimately don't have the stress But that's, it comes from making bad decisions. Like if you make bad decisions, to be able to come out of of that situation is difficult. But if you're constantly making good financial decisions, then it's like the benefit of like compounding benefits. So you make a good decision, you make a good decision, and it keeps adding, and the wealth that you accumulate will kind of look very different to like if you constantly make bad decisions. And if you're making bad decisions, it's very hard to then recover from it. So yeah, I think it's just more education. I think that I've heard news and rumblings that the government's going to add more kind of education, even pensions. Like I talk to people about pensions, they have no idea. It's all like a bit of a dark art. Even like things like mortgages, compound interest, and amortization. These are things that are like very important. Like things like most people don't understand that when they take out a mortgage, most of the monthly payment at the beginning of their mortgage is interest. And if you make overpayments on your mortgage earlier in the term, you save a lot more interest than if you do it later in life. And these are like really important things that people don't learn about at school, and so they don't really appreciate. And unless they're really like listening to podcasts like this, or listening to influencers, or reading books, they they're not gonna know about these things. And so yeah, but if you learn it at school, obviously you're then geared up to success.
Amazing. Jinesh, thank you so much for coming on today. And yeah, thank you so much for your time.
No, thank you for having me.
Very welcome.